Good afternoon, cocksuckers. I am recording this right after the most recent update and recap video, so again, I am fairly tired, but I did want to get this out because I think it is important, and I know a lot of people are curious. I also want to make it clear, this will be going on sale soon, as in this will be something you have to purchase. For those who have been OGs, the fucking family that I never knew I had, seriously, you guys get it for free. Anyone who also contributes any actionable or significant feedback that aids me in bug reports or any great suggestions, all that shit, also giving it away for free. Otherwise, you will have to pay a monthly or annual fee to access this. If you're butthurt about it, sorry. I've put countless hours and time and effort into programming this and theorizing and compiling all of my oh-so-wise year and a half of market knowledge. So, yeah, I'm going to sell this shit and I'm going to make money from it. So, suck my dick. So, anywho, I want to make a guide on this, just so, there's some understanding as to what not only is going through my head, but how I hope that this helps people, and I hope that even gives you a different lens to look at the market through. So this is what's known as Wyckoff Sniper. This script is the culmination of fractal theory, cycle theory, and numerous other isms that I've kind of come up with over the months. The entire point of this is to give you a lens into what market makers are doing with price action. There is a huge update coming soon that involves volume. That will also be a part of the indicator suite. But to go back, this is just a way to kind of visualize what market makers or institutions or funds are really doing with price action. Please remember that as great as this can be and as much as I love it, indicators in any sense, whether it's a MACD, an RSI, on balance volume, or this fucking thing, it's just like a pilot piloting an airplane. If you're stuck in the middle of a fucking thunderstorm, sometimes you have to rely on your instruments, but ultimately it's you who's going to be doing most of the actual decisions that can make or break your fucking airplane. So with that in mind, this is just another lens to look at things through. And if you can create the proper arsenal of lenses so that your composite lens, your fucking whatever the compounding lenses create for you, hopefully that is something that this can heavily contribute to. So with all that being said, the simplest way to look at this is it all has to do with Wyckoff, so dig into that if you haven't already. At a minimum, accumulation and distribution and their phases. And, it's a little bit of intuition when it comes to analyzing price action. So all in all, once again, this is just a way to visualize price action. It does offer numerous signals and signal types. Let's see. Yeah, so anytime something is exiting reaccumulation, your springs, your whenever certain latent price action indicators take place. So if your long-term accumulation crosses over your long-term distribution, that is a golden signal. Yeah, so there's a lot to unpack here. I'm going to probably split this up into multiple videos. Yeah, there's also auto support and resistance lines. There is something experimental that involves factoring short interest into the calculations for your spring region, which I'll get into here in a second. So a lot of really cool shit. So let me get right into it. Fucking 5 minutes later. So what are you looking at here? What does this entail? So in the world of Wyckoff, you have accumulation and distribution. Again, look into those if you haven't already. The entire premise, though, is that the market maker always wins. So what you see as a buy is a sell to a market maker, and what you see as a sell is a buy to a market maker or composite man or a hedge fund. This is giving you that bias effect to kind of flip your understanding of the market on its head. There are four main components to what you're seeing and what powers this thing. You have your accumulation region, which is the green cloud down here. You have your spring 200 simple moving average. This is just like any other vanilla 200 MA, except that it's creating this moving average from confirmed springs. So this is like the moving average of moving averages in terms of price action. You can also see that this is reciprocated on the distribution side, which is in red. Your red cloud is your distribution region, and your red line is your distribution 200 MA. So put simply, how do you use this? Well, you're going to probably pair this up with some other indicators that you use. On-balance volume is great. RSI is great. MACD is probably the bread and butter to this, as it kind of confirms things even more. But what you're looking for is schematics of accumulation and distribution, and this will automatically label certain parts of that to help you make better trades. So we're looking at Twitter here on the 5-minute. This is after its little run to 48 after all the Elon drama. You can also see that if we look before that big move, that we had a buy signal actually go off. And the thing that prompted this, and we're on the 1 hour, by the way, the scanning length is set to 21. This is basically how many candles are to consider to be a part of a Wyckoff schematic. You can see that we had this go off. And the reason why this went off is because our price action was above our distribution range. We hit a low that tapped into the distribution cloud, or the distribution range, but closed at or above that cloud. And that is a sign of support from a Wyckoffian point of view. If you are to look at the MACD, that was actually the tipping point where things started to flip to bullish as well. Something really just neat about this is that it's giving you an entirely different lens to the market, because it's fundamentally changing the approach to what is a buy or a sell. So we had that fire off, and then, ironically, I guess, I don't fucking know, the thing jumped from $39 all the way up to, what is this? Where did it go? What just happened? I don't know what the fuck is going on with TradingView. Okay, here we go. So it went from 39 all the way up to 54. So that's a 20% move overnight, basically. Now, there are false signals, and this has to do with different time frames being accounted for. Typically, if you have a bad signal fire, it's because something else more important is happening at a higher time frame. So again, if we start to look at what was going on, this was the gap up. So we were actually well above the distribution range on the 2 hour. So that would be considered bearish to some extent, because we never actually retouched this for support. But we did have that fire back here. You can also see that as we crossed over the 200 SMA of the spring regions, that a buy signal fired, and that's when this went from 34 all the way up to 39. So that's 5, 6, or 7% move. We also have some great behavior here, illustrating the reconnaissance factor to how it's defining springs, because we on the 2 hour got a perfect bounce off of the lower spring region, and then we continued to accumulate. But that was a relatively perfectly timed spring, as far as I'm concerned. Now, one more little caveat to consider is if you see these massive dives or ascensions, so like right here on the spring region cloud, you see this massive drop off. This means that there's a higher time frame at play. Whenever you see, this is kind of like a residual pressure almost, is a way to think of it. So if you see out of the blue that you had a massive drop off one of your clouds, that means that it's a higher time frame at play. So I'm actually gonna put a little marker here of where that drop off happened, and I'll jump to the daily, for example. And you can see that the daily was unaffected. If we go to the 4 hour, relatively unaffected, but you're starting to see the gradient at play. The 3 hour even, yeah. So your gradient is happening around the 3 to 4 hour range. Now, as far as the daily goes, you can see that we're actually intersecting here at the accumulation and distribution clouds. And what this means is that there is a squeeze that is going to happen. Excuse me. The purpose of these clouds as well is to illustrate the ranges at which market makers or composite man or hedge funds are able to move price around, because the entire point of a market maker, the entire point of anyone who is making the breadiest of bread in the world, whether you're a market maker, you're a bookie, you're a highway toll booth, your action comes from people getting in on the action. And so what that means is that you have to have fresh trading ranges to churn liquidity. Another point I want to make is if you pull up a market profile, which if you're not familiar with this, I guess just kind of glance over this part. It might make sense, it might not. Just bear with me. When you look at the ranges that are traded, it actually is capturing what this market profile is before it's even happened. You can see like the curvature here of this entire thing is almost a dead match to what the indicator is calling for as your ceilings and your floors. The majority of the trades took place at where you see the yellow line, and that also happened to be where things broke out. You can also see that as we started to break out over the 200 moving average for the spring regions, that was also where you saw action, and that's where you saw a lot of liquidity jump in. You can then see after that we actually were able to kind of guess at the gap up as well, because of the fact that this market or this instance of our market profile had called for a top at the 34.54 range, which makes sense because that was the session. But the Wyckoff Sniper was still sniffing out that this was a discoverable range where the distribution clouds are at. So yeah, that's Twitter. You're going to quickly get a fantastic intuition, I think, on what the market is doing with this. Also, one more little caveat, you might see conflicting signals, like we have a short and a long signal go off. This typically, it's just you could call it uncertainty. This is kind of where you have to man the aircraft. This is pretty evidently bullish. We had two buy signals go off before, and we're well into pushing over the distribution cloud. So I'm going to jump to SPY. This is another good one. I like to jump onto the 5 minute of SPY. Now, as of recent, things have been really, really, really turbulent with SPY. So, this isn't quite the best environment to be trading off of this on, or at least on shorter time frames. You either have to go really, really, really short on your time frames, or really long on your time frames to get better readings. But this called a lot of downs in terms of SPY. This goes all the way back to about the past 2 to 3 weeks. All of these were short. No buy signals. You could, I will add an indicator or a signal here. If you have your bounce off of your SMA spring line, that's big. But it perfectly caught the bottom there. It's something that will aid you in your intuition, essentially. We have some golden signals going off. The golden signals are basically they're more significant alerts, if you will. Typically, when you have a golden signal, it has to do with latent price action, which means that you have the clouds or the lines from the clouds interacting in a way that is not seen often. To have latent price action take place like this means that something big is around the corner. That's like a super cycle of liquidity, if you will. Yeah, so I guess my last little thing, like we'll look at, here's another good one actually, Ader. If you were to look at the daily candle, or what was it? As far as scanning, yeah, I'm definitely going to make another video for this that is a little bit more in-depth about things like scanning links and whatnot. So with Ader, it actually triggered a buy signal on the daily. I should have actually triggered one back here. But if you had gotten in on the buy signal on the daily, it was a low at 380, you would have nearly 100% your returns. It's also about to push through the accumulation 200, which is big. So that's really great for Ader. I'm excited for them. 20% move today. I'm sure it sniffed that out as well. Yeah, it called it right here. This was actually when it was at 240. So you could have nearly tripled, actually. Yeah. So there's your buy. It called short right here. Couple premature buy signals. I guess you could call those false, technically. But the way that it's capturing the ranges of distribution and kind of what to expect is uncanny. Yeah, so that's kind of where I'm going to leave it for now. You can also see how it's perfectly calling these fucking bounces, man. It's incredible. It's fucking incredible. Yeah, I think I'm just going to leave it there for now. I will release some more in-depth videos, things specifically about the scanning lengths, having multiple instances of this. I guess I'll jump on that real quick. I've got a special version of this that I modified that just shows the whatchamacallit, the speed lines. So yeah. So I have 3 instances of this, each tuned to a scanning length of 11, 21, and 31. So this gives you what are called speed lines. If you're not familiar with those, I recommend digging into a very brilliant, fucking wise-minded, fucking handsome motherfucker named Bam at Bam Investor. He's taught me a lot about this shit. Basically, your speed lines just represent, to me, what I call latent price action. It just has to do with the effects of some impulsive move taking place and how that affects the future. So when you have 3 different time frames, you're stacking, you're building a greater picture as to what's going on. So when you see these start to overlap, it's just like having moving averages cross over or cross under, but as well as when you have them coil up like this would be a triple cluster, as Bam would call it. So when you break through it, it's going to have the magnitude of each of those breakouts, but in a single area or a very confined area, which means that you're 9 times out of 10 going to have breakouts of each of those, right? And the velocity of those movements, each passing through their respective lines. So you can mess around with this. There's different lengths that you can use, different time frames. It's a different way to view the market. And actually what I like to do even is I turn off the candles and I can just look at the highlights of what's taking place. So just by turning off candles, I can see exactly how it's riding the market, and I can see where the springs are taking place, and you kind of create your own pseudo candle or your pseudo price metric. It's incredible. It's incredible, especially when you're looking at the way that it respects the distribution lines, where it enters and exits, where the springs enter and exit. It's really a fucking work of art, and I'm so happy with it. So it is still free at the time of recording this video. If you want to check it out, go for it. As far as price and all that goes, I'm not sure yet. But I do hope that people can make some money off of this. So with all that being said, thank you so fucking much. Thank you to everybody who's been along for the journey. It's been a fucking pleasure, and we're going to keep fucking going. So thank you all. I'm outie. I'm going the fuck to bed. Love you.